Okay, managerial accounting, let's get talking about job order costing from Chapter 2. The first thing we're going to talk about is the types of firms that would use job order costing. It's very important to know what type of firm would use it because it's not appropriate for certain firms. So basically, the type of firm that would use job order costing is one whose tasks, it's very difficult to explain job order costing without using the word job, but it's a firm whose tasks can be broken up into individual assignments. These individual assignments have a start date and a stop date. And you can measure all of the resources that go into that task or assignment. Now, there are many types of firms that would use job order costing, and many service firms would use job order costing. So, for example, with a lawyer, a particular divorce, you can measure how many hours, you can measure the court filings, and in a few moments we'll talk about the overhead also that goes into the job. A dentist, a particular root canal or braces or anything like that could be considered a job. It has a start and a stop date. You can measure the hours that go into it, the labor hours. You can measure all of the materials that go into it. Another good example that I like to use is a landscaping company. Again, if you're going down to take somebody's tree or to install some flowers and bushes, you can measure all of the resources that go into it. You can measure the labor hours and you can measure all of the materials that go into the job, and it has a start and a stop date. Now, the types of firms that are not appropriate for job order costing are those firms that have continuous output. The best example that I normally give when I teach job order costing is a firm like Mattel that produces Barbies or G.I. Joes. Basically, they just have continuous output. To break it up into a start date and stop date and measure the resources between those dates is artificial. I mean, do break it up by week or day or a month. There's no natural start and stop date like there is with the other types of firms. So if you have that continuous type of output, what you use is process costing. And again, it's continuous output of basically the same product. When you use job order costing, the products are differentiated. So a lawyer wouldn't have the same amount of hours for every single job. Same thing for a dentist, same thing with a landscaping company, but every Barbie is exactly the same. Okay, now that we know what types of firms use job order costing, let's see how we use it. Now in this chapter, job order costing is incredibly easy because what's going to happen is your accounting system is going to give you most of the information that you're going to need. So let me explain. And I actually have experience in job order costing because for a short time I worked as a bookkeeper for a heating and ventilating company, so I can use my experience with explaining it to you. Now, the total cost of a job is going to be the sum total of all of the three manufacturing costs that we have. The sum total of the direct materials used on the job, plus the direct labor used on the job, plus the manufacturing overhead. I'm going to use a new word right now, applied to the job, but I'll explain that in a few moments. So the only calculation we're really going to have to do is for the manufacturing overhead, because the materials and the labor are going to be given to us in the homework problems and also in real life, because as I'll explain, when you use job order costing, you kind of keep a running total of the materials and the labor that are used on each job. So all you have to do is run the reports at the end, and you automatically know how many materials and labor that are used on the job. Whether you use a manual system or an automated system, it's designed to give you that information at the end of the period. So let's start off with an explanation of how direct materials work in job order costing. So when you purchase direct materials, you're just going to put them in the storeroom. So that's just the purchase of an asset. You're going to debit direct materials and credit cash or credit accounts payable, but we're going to go into the journal entries next chapter, so something to look forward to. So for direct materials, when you purchase direct materials, just increases the direct materials inventory. In fact, I'm going to say materials inventory. Now what happens is direct materials are then requisitioned to use in jobs. So for example, when I was the bookkeeper at that heating and ventilating company, if one of the workmen needed a condenser to replace a broken one in an air conditioner, what he would do is he would fill in a requisition sheet. And that requisition sheet would be sent to me for approval. And one of the things that I would look for on that requisition sheet is the job number there. And in using a computerized software system, you would have a screen that would have you choosing the direct materials for requisition, and then just a box on the side for what job you would apply it for. So again, whether it's a manual or a computerized system, when you requisition the direct materials, you note what job it's being used for. Now, there are some times that you requisition materials and they're not direct materials, they're indirect materials. So, for example, the landscaping company might requisition some gas to use in the chainsaws, and you wouldn't know exactly which job it goes to. So some requisitions might be coded as indirect materials, which is considered overhead. But again, we'll get into that in the next chapter. I just wanted to note that here. So basically, when requisitions are pulled out of the material storeroom, you either know what job it's going to, or it's allocated to manufacturing overhead. Okay, let's get into direct labor. Direct labor is very similar. When you process the payroll with direct labor using a computerized or a manual system, when you have the direct laborers that work for jobs, you don't say, oh, they worked 40 hours this week. You have to distribute all of those hours to the job. So out of the 40 hours, you would go off to the side and say, okay, of those 8 went to job 101, and 7 went to job 102, 9 went to job 103. Any unclassified time, so workers will spend some time taking breaks or traveling from job to job, or maybe they don't have a job. So all of the unclassified hours are considered overhead. Again, we'll talk about how that works in the next chapter, but all of the labor hours are either going to be classified as direct labor and then applied to the job, or overhead. So at the end, all of the labor is going to be broken up and you know how many hours are going to go to each job. Okay, now let's move on to overhead, which is the only thing that is not real. I'm not going to say it's hard, but it is the only thing in job order costing that is not given to you. So most companies use what is known as a normal costing system. Now, with a normal costing system related to overhead, the first thing that you're going to do is you're going to decide a way to allocate the overhead between jobs. Now, this is managerial accounting, it's not GAAP, so you can use whatever method that you want. So, for example, if I'm a dentist, I could just say, okay, I did 15 jobs this month, so every job gets 1/15 of the overhead. But that's not fair because a cleaning is not the same as a root canal, which is not the same as braces, so they take different resources. So what most companies use is direct labor hours because if you notice, they're already keeping track of that already, so they already know how many direct labor hours apply to each job. Now, again, if you have a company that doesn't use a lot of direct labor hours, maybe it's mostly machine hours, so they make customized furniture or customized computers or things like that. They could use machine hours to allocate the overhead, but in this example, we're going to use direct labor hours because, again, most companies use it because it's easy. They're already keeping track of it, and it does seem to make sense that a job that has more direct labor hours will use more or incur more overhead. So to use the normal costing system, first you decide a way to allocate the overhead, and we've already decided direct labor hours. By the way, the fancy terminology for this is an allocation base. So I would say in this case that the allocation base is direct labor hours. So what you're going to do is at the beginning of the year, you are going to budget your overhead and you're going to budget your direct labor hours. So you're going to make a guess at the beginning of the year, but when you've been in business for many years and you have a good cost accounting system, normally you can make pretty good guesses. And when we go on in a later chapter, we'll talk about what happens when your guesses aren't so good. So once again, something to look forward to. So we're going to decide a way to allocate that base. So we're going to decide a way to allocate that base. In this case, it's going to be direct labor hours. So at the beginning of the year, we're going to budget direct labor hours and budget manufacturing overhead. Then all we're going to do is we're going to take the budgeted overhead divided by the budgeted allocation base, in this case direct labor hours, and then we're going to get a rate per direct labor hour. Now it's called a normal costing system because we're going to do this at the beginning of the year. Then all throughout the year, we're going to use that rate per labor hour to apply overhead to jobs. So for example, let's say that dentist is doing a cleaning and the cleaning only takes a half hour. That job will only get 1/2 hour of that rate per hour. But if the dentist is doing a root canal and the root canal takes 4 hours, that job would get 4 hours of that rate. So let me write that down, and then I'll do a numerical example, and then we'll go through the example in the book, which, as I said, is extremely easy because the materials and the labor are given to us. All we have to do is calculate the overhead. So let's give you a numerical example. Let's say that dentist that I told you about has an overhead rate of $50 per per labor hour. So we have job number 102, which is a cleaning, takes 1/2 labor hour. It takes them only 1/2 an hour to do the cleaning. So again, we know all the materials and we know the labor, it's a half hour. We multiply it by the labor rate. So job 102 gets 1/2 hour multiplied by $50, which would only be $25 of overhead. Now, let's say we have job number 105 is going to be that root canal. And the root canal takes 4 hours. So again, we know the labor because it takes 4 hours. We just multiply it by the labor rate. And in a future chapter, we'll get into activity-based costing. So we could even say, it takes so many hours for the dentist and so many hours for the assistant, and the dentist is billed at $75 an hour and the assistant is billed at $30 an hour, right? We can build that in, but for right now, we're just going to use one labor rate. So job number 105 is a root canal. We measure all of the materials that are requisitioned for the root canal. Once again, once they're requisitioned, right, we know that the labor takes 4 hours. So all we need to know is the overhead to calculate the total cost of the job. So for this one, we would multiply 4 multiplied by our $50 per hour overhead rate. And this job would actually take $200 of overhead. Okay, so I hope you guys have followed along. Now we're just going to go very, very quickly through the example in the book and calculating the cost per unit. So for our example from the book, we were told at the beginning of the year that our budget for our overhead is $640,000 of fixed overhead and $4 per hour of variable overhead. We've decided to use labor hours as our base, so we also have to budget labor hours. So we're going to budget 40,000 labor hours. So what your book did was multiply the 4 times the 40,000, added it to the 640, and then divided everything by 40,000. But we already know the variable part is $4 per labor hour. So I'm going to take the fixed overhead of 640,000, and I'm going to divide it by the labor hours of 40,000. And I have my fixed overhead rate of $16 per labor hour. Now my variable, I don't have to do the multiplication because it's given to me already at $4 per labor hour. So now if I add the two together, my overhead rate is going to be $20 per labor hour. So if I have a job that takes 2 labor hours, it's going to be 2 times 20. If I have a job that takes 100 labor hours, it's going to be 100 times 20. So this is going to be the total overhead application rate. That is a fancy terminology for saying the total amount that we're going to charge for overhead. So the overhead is going to be $20 times whatever labor hour. So in the example in the book, the direct materials, that's not even close, were given in the problem as 1,000, in the book, I'm sorry, in the example, as 1,404. And you can take a look at the materials requisition sheet in the book, but it's a very short section in the book. Then the direct labor is also given as 446. And what happens is, if you take a look at the sheet, they tell you that it is 27 labor hours. So now we have to apply the overhead to the job, because as I said at the beginning, the materials plus the labor plus the overhead is going to be the total cost of the job. So we know that we had 27 labor hours, and we know that our overhead application rate is $20 per labor hour. So to calculate the overhead, we take the 27 labor hours and multiply it by our $20 per hour overhead rate. So to calculate the overhead, I'm just going to take 27 and multiply it by 20, and we have $540 of overhead. So now we can calculate the total cost of the job, because we have our 3 manufacturing costs, the cost that it takes to make or produce or manufacture that job, the materials, the labor, and the overhead. So I add the 3 together, and the total cost of this job, which in the book was job 2B47, the total cost is $2,390. Now, you don't have to make just 1 unit in a job. So for example, we could be making 2 specialized computers, or 3 plans that are exactly the same, or whatever it is. So in this case, in this job, we're making 2 units. So what we do is we take the total cost of $2,390 and divide it by the number of units, and we get a cost per unit of $1,195. And now that we have a cost per unit, or the cost of the job, we can compare it to the revenue and see if we're profitable. So that is actually about it for job order costing. In the next chapter, we'll go over the journal entries and go in a little more closely into how job order costing works. Bye.